Hi, this is Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, tonight we have the big Plan B vote to see if Boehner can get these votes through the House. We shall see. Markets are reacting quite differently from one another. Let's start with the equity markets. We're seeing an uptick in correlation when you look at the NASDAQ, the Dow, and the S&P 500. All implied volatilities are up just a little bit. Right now, the market is higher going into the half hour left into the trade. Volatility is up just a little bit. One important note is that especially in the S&P 500, we're seeing a continuing downshift in term structure. What that means is that there's a bidding up of the 1 through 3 month duration in options. Back month volatility is remaining flat, so we're seeing a downward parallel downshift in volatility. U.S. Treasuries, very, very interesting. Yesterday, U.S. Treasury 10-year volatility hit its lowest point since the Bear Stearns debacle in 2007. Since then, today, Treasury vol has crept up just a little bit, but still trading very, very cheaply. The U.S. dollar, very, very volatile today, all over the map. By the close, FX was basically flat. However, volatility was up on the day as judged by the euro currency, which was up about 1.3 month at the money implied volatility. Also up was Australian dollar and Japanese yen. Moving on to some of the bigger movers today. Gold, second down day in a row, down about $19 on the day. The gold volatility ETF right now with about a half an hour left to the close, up 5.5% on the day. That is two gigantic moves in a row. Also, silver following in suit. Silver down about $1 on the day. The silver volatility ETF up 1.75%. Another big mover today would be wheat and soybeans. The combination of the weather in the states west of Chicago, also with the scale back of the Chinese soybean sale, has dramatically dropped soybean, corn, and wheat. But when we look at especially wheat and soybeans, they're being affected with volatility. Both volatility are up. Skew is up in soybeans, also in wheat. What's also interesting to note is that term structure is not flattening right now. There seems to be a little bit of selling pressure in the front months. The deferred months are being bid up. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.